Time now for Better Money Boston. Nick Colantuno is a certified financial planner with Johnson Brunetti. And you know, Nick, when it comes to retirement taxes, we cannot overlook them. There's a lot to know here, especially how our money in retirement is taxed. Walk us through that. Let's start with ordinary income.
Absolutely, Megan. The most common source of income in retirement for our clients and for many of the folks watching is ordinary income. What we're looking at there are distributions from IRAs or 401ks. In other words, all the money in these accounts, in most cases, you've never paid taxes on before. So you've gotten really good growth out of those accounts. But you have to remember, when you start taking distributions, every dollar that comes out hits you as earned income, both federally and at the state level.
Okay, let's move on to dividends.
Sure. So dividends, now this is an income that you might be realizing even if you're not using it or not, but these are in accounts that live outside of the IRA world. Mutual funds pay dividends. Bonds pay dividends. Every year, you realize taxation on those dividends, even though, again, like I said, you might not actually be taking that money out. It's based on capital gains tax rates or dividend income tax rates, which of course are based on your earnings, not actual earned income.
Okay, let's move on to capital gains, Nick.
Yes, capital gains taxes. Again, this is the difference between what you buy something for and what you sell it for. You're only on the hook to pay capital gains tax on that actual gain. Capital gains tax, unlike income distributions from IRAs or 401ks, are based on a lower, more favorable tax rate, at least for many of our clients.
Okay, so we've got ordinary income, there's of course dividends to consider, and then capital gains. There's a lot on the line here if we overlook taxes in retirement, correct?
There absolutely is. It can't be understated because many of our clients are having income from all three of these sources, maybe even some additional sources, rental income, or you buy and sell a property. It's very important to know because, again, you've worked hard to save all this money. You need to know the ramifications of taking that money out from a tax standpoint.
And you have a free book on this topic.
We sure do. It's such a large part of what we do on a daily basis that we actually wrote this book. It's called Taking Charge of Your Taxes. It goes over all the things that you need to be aware of when taking distributions, whether it's from a retirement account or a non-retirement account. So please, we hope to give it to everyone watching.
You can get that free book today. Simply go to bettermoneyboston.com. That's bettermoneyboston.com.